In April 2025, China made a move that stunned the aviation world. It banned its airlines from accepting new Boeing aircraft. This was a direct response to the US raising tariffs on Chinese goods to 145%, citing issues like the fentanyl crisis. Beijing retaliated with its own 125% tariffs, and, more critically, slammed the door on Boeing's access to the world's second-largest aviation market. For years, China was central to Boeing's growth, with a booming middle-class fueling demand for new planes. Boeing even opened a 737 delivery center in Zhoushan, China, a multi-billion-dollar investment now in jeopardy. The ban formalized what had been a de facto freeze since 2017, but now dozens of completed planes for Chinese airlines are stuck in limbo. One striking example, a brand new 737 MAX painted for Xiamen Airlines was flown out of Zhoushan, only to be sent back to the US. This symbolized a fractured supply chain and a broken partnership. The move turned Boeing from a global powerhouse into a pawn in a high-stakes trade war. The aviation industry, already under pressure, now faced a new and existential threat. The US-China relationship, once built on commerce, had become a battleground. The world was watching as two superpowers weaponized their economies. For Boeing, the financial fallout was immediate. The company held a backlog of about 140 aircraft for Chinese airlines, billions in revenue now frozen. Analysts estimated a cash drain of at least $1.2 billion, a blow for a company already reporting losses and under regulatory scrutiny. The loss of China, which once accounted for a quarter of Boeing deliveries, removed a vital revenue stream. Boeing now faced the costly task of finding new buyers for dozens of white tails, planes built for China, but undeliverable. Reconfiguring, repainting, and reselling these jets would take time and money. The crisis forced Boeing to divert resources from innovation, just as it needed to compete with Airbus. The company's future was suddenly more uncertain than ever. Boeing's crisis was just one front in a much larger US-China economic war. The US imposed tariffs up to 145% on Chinese goods, triggering China's 125% retaliatory tariffs and restrictions on rare earth exports. The World Trade Organization warned that US-China trade could plunge by 81% if the conflict continued. The US stock market lost $1.5 trillion in a single day, and retailers like Walmart warned of higher prices and empty shelves. Supply chains built over decades were suddenly in chaos, making everything from electronics to clothing more expensive. US tourism faced a projected $90 billion loss as travel between the two nations stalled. Treasury Secretary Scott Bessent admitted the tariffs were unsustainable. On the Chinese side, US imports fell by 64%, and key American ports saw container traffic drop by up to 44%. Both economies were bleeding, with no easy victories in sight. The trade war's ripple effects were felt on Main Street and Wall Street alike. The aviation standoff was just one example of a much deeper economic fracture. The world's two largest economies were locked in a destructive stalemate. The global order was being rewritten in real time. China's ban on US aviation parts sent shockwaves through the entire industry. Even Airbus, Boeing's European rival, was affected. Its Tianjin plant relies on US-made engines and avionics. China's own Comac jets, like the C919, depend on Western technology, especially the LEAP-1C engine from a US-French partnership. The ban threatened to halt production and expose the deep interdependence of global aviation. Some Chinese maintenance shops could still import parts, but others faced severe delays, creating chaos for airlines. Stockpiled components wouldn't last forever, raising concerns about long-term safety and reliability. The disruption spread beyond aviation. Mazda halted US production, and DHL suspended some shipments. The trade war was unraveling global supply chains across industries. Companies worldwide scrambled to adapt to a new, unpredictable landscape. The aviation sector's turmoil was a warning for all international business. The era of seamless global trade was under threat. Just as Boeing's prospects in China looked bleakest, Comac, the Chinese challenger, hit a wall. In July 2025, Comac slashed its C919 delivery target by 2/3 due to production delays and supply chain bottlenecks. Ironically, a temporary US export restriction on the LEAP-1C engine exposed Comac's reliance on Western technology. Major Chinese airlines, desperate for new planes, received only a fraction of their orders. With Airbus production slots sold out for years, Boeing remained the only other viable supplier. Beijing faced a dilemma. Its airlines needed modern jets now, but its homegrown solution was years away. The urgent commercial needs of China's airlines began to outweigh political goals. The door for Boeing, once slammed shut, was now slightly ajar. Economic reality was forcing a rethink in Beijing. By summer 2025, signs of a thaw emerged. China's aviation regulator quietly surveyed airlines about their Boeing needs, a clear signal of reconsideration. U.S. Ambassador David Perdue confirmed high-level talks and hinted at a major Boeing deal nearing completion. Both sides were seeking an off-ramp from a mutually destructive conflict. A new Boeing order, timed with a diplomatic event, could symbolize de-escalation and allow both leaders to claim victory. For the U.S., it would mean saving jobs and a key exporter. For China, it would mean getting the planes its airlines desperately needed. Boeing's fate had become a powerful bargaining chip in trade diplomacy. The company's future now hinged on delicate negotiations between Washington and Beijing. The world watched for a breakthrough. The trade war exposed the fragility of global aviation. Boeing's ordeal showed how quickly politics can upend decades of business. Even if a new deal is struck, trust must be rebuilt, and access to China can no longer be taken for granted. The industry faces a shift toward fragmented supply chains and onshoring, raising costs and slowing innovation. The future depends on whether US and Chinese leaders can find lasting common ground. A Boeing deal would be progress, but deeper issues, trade, security, intellectual property, remain unresolved. The aviation sector will stay at the heart of these tensions, with Boeing, Airbus, and Comac competing for dominance. The events of 2025 are a lesson. Economics and politics are now inseparable. The crisis has reshaped strategies and forced a reckoning with geopolitical risk. The sky ahead is uncertain, and navigating it will require both diplomacy and engineering excellence.